Hi fellow traders, here is fresh analysis of Euro USD. Recently Euro USD reached our target which I had explained in the previous videos of Euro USD. So uh, like I said, Euro USD reached this 127% extension of this BC. If we consider ABCD from this point, like we this is the A, this is the B, this is the C, and this is the D. In modern style of calculation of length of CD leg is determined according to the length of AB leg, and it is considered most appropriate if the speed of the CD leg is equal to the speed of AB leg, as well as the length of CD leg is equal to the length of AB leg. So that is called ABCD 100% extension. But in classic style of calculation of CD is not necessarily supposed to be going with the same speed, and also is not necessarily supposed to be measured as per the length of AB. Rather, it can be measured as per the length of this BC, this retracement. And it can be simply 127.2% extension of this BC. That's why you will find quite often that the CD leg becomes something like a butterfly. And butterfly is also 127.2% extension of this first leg. So this is the smaller butterfly. Let's go to the 4-hour time frame and I'll show you what I'm trying to explain here. First of all, just ignore this yellow candle here, yellow chart here. All right, now it is fresh. So I'm talking about from this point A, B, C, and D. So as per the classical approach, this ABCD has been completed as along with this butterfly 127.2% extension that was around 1100 area. And if you remember the weekly support, 50% was at 1110. That has also been completed. 50%, this level was around 1110, and this was the 50% 50% of entire upswing on the weekly time frame, recent upswing. I'm talking about this entire from C to D. All right. So now is the time to see which direction is further gonna be followed by Euro USD, because this 50% is the significant level, and this is the last hope for bulls. If price doesn't uh, go back to the upside from this level, then price will be further falling down. And there is a minor support which can be said to be at this 100% level as per this AB CD 100%, or you can say AB equal to CD. So I had already discussed this as well. That is the 1090 area. I had last time shown that the next support zone will be something between 1090 and 1110. But this is not necessary for market to reach this 1090. So that's all about the recent movement. Now we have to be looking at the price action from this point. I am still skeptical about any bullish development, because I see something quite different on weekly time frame, which is going to most probably erase the probability of the ABCD. You remember the bigger ABCD from this point, A, B, C, and D 100% extension at 1280 area. So this was the theme of considering bulls after retracement from this area. So first attempt what here that failed, second attempt has still not been made. And this BC leg, if we go to the weekly time frame, this looks like uh, just 1 second. All right. So this is the weekly time frame, and this ABCD, just like I told now, is not necessarily to be completed at AB equals CD. CD leg is quite slower than AB, so CD is not harmonic with AB, and that's why CD is not necessarily supposed to be measured as per the AB. CD can be simply 127.2% extension of BC, that is the retracement, and BC should be 0.618, that is 61.8% retracement of AB. So that is the classical ABCD, which is considered as reversal pattern. So if we plot here Fibonacci tool from this to this point, you can see that the C point has been made as 61.8. That is the 61 point retracement against the move from A to B. So the BC is very mathematically correct, and CD is also correct because CD is 127.2% of BC. So this ABCD is said to be completed as per this classical style of ABCD. All right. The second thing is the D point is very near to the 61.8% retracement resistance level of this move down from this point to this point, and market had closed below this 61.8 in last week. So this is gonna make something like a bigger Gartley pattern on this weekly time frame. It will look like a Gartley. And this entire ABCD will just be considered an upward retracement on weekly time frame. So this is the bigger picture. Let me change this color to make it separately noticeable. So 1 second. All right, so here we go. This is, and insert the shape, the triangle again. So this entire movement from the C to D is just the right arm of the Gartley, and the speed, the entire speed from the A to D is slower than the movement from this point, this X point. This if we are considering this move, this entire pattern as a Gartley, then the X is here. This is the X. All right. So sorry. So this will be XABCD. AD is slower than XA, so obviously it will be just a considered retracement and price may fall down. Now let's look at the candle pattern. Weekly candle patterns are really significant. Last time you can see here that this was then evening star. The big bullish candle, this dozy candle, and this bearish candle. These three candles had made evening star and price had fallen. This time, these three candles are also making the same thing. And this will complete an evening star if the weekly candle will close below the midpoint of this this bullish candle. So the midpoint of this bullish candle, let's calculate. This is the candle of 122 pips almost. So the midpoint will be something around 61 pips. So this is around 1127, 1128 area. So if the price closes below 1128, 27 area by end of Friday, then this will become an evening star, and Gartley will more likely to work, and this AB equals CD, this 100%, this 1280 area will be completely invalid, and this will not be there on the table. So we will rather not be looking at any bullish kind of signal. So let's see what happens further. And another thing which is making me very worried about 1 second about bulls is the change in the trend on daily time frame. All right, I'm just hiding. So the daily, if we look at the daily candle, the candle yesterday made below this MACD predictor, this red moving average kind of line. This actually is not a moving average. This is a MACD predictor. Price opened in the right side of moving this MACD predictor, closed well below it. So this has changed the trend, and this is the significant change because the price action is really bearish. This is very nice candle with the real body, big bearish body. So this is a change in the trend. So all of these things are telling that the further bullish picture has completely been erased, and we should be looking at the final formation on the Euro USD, maybe on weekly time frame as well as on daily time frame after release of non-farm payroll, and then we can wait for the retracement to the upside, and we can enter sell position. This is the one approach of entering sell, and another approach is a little aggressive. As per another approach, we can enter before NFP if we get the 30% retracement after this after this butterfly. So if we look at this smaller time from 1 hour, so from this point A, B, C, and this D has been completed. This is this CD leg has become a butterfly and is from this D point, as per the class, as per the butterfly, there should be a reversal to the upside. If butterfly or any reversal pattern doesn't cause full reversal, at least they can cause 30% retracement. So 30% from the entire move from this point to this point is here. So you can place a sell limit here, and then you can simply target the next nearest area, that is this one, 1090. It will give you 42 pips, and you can simply place your stop loss above this C point, that is 34, 35 pips. So this risk reward is also better because your reward is better than bigger than risk. So this is the aggressive approach of trading. This 30% of butterfly is also coinciding with the previous swing low, this area. So let's see what reaction will happen from this point. And if you are aggressive, you can go for this. Otherwise, you can just wait for non-farm payroll, look at the actual release, compare the deviation of actual release from the forecast. Also wait for next 3 to 5 minutes and see if there is any revision. Compare the revision versus the previous actual release, and see the and find out the deviation, and then compare the deviation of actual release versus the revision. And if you finally see that the non-farm payroll is better, then it will further strengthen the idea of selling Euro USD. If price will give you an opportunity to enter around this area or maybe this area, you can simply enter short, and then target will be not this AB equals CD 100%, then target will be something different and something bigger, which will be decided as per the development of price between Thursday and Friday. So just I'm going to wait for non-farm payroll. I'm not making any entry. I already made profit in sell position. I'm now staying on the sidelines, and we'll be waiting for NFP, and then I'll enter as per the result of NFP. Thank you for watching. Have a nice trading session ahead. Bye bye.